Hello everyone, welcome to this edition of Skipton Talks, and today I have Richard Beardshaw, the chair of Imla, with me. So thanks for coming to join us in sunny Skipton, Richard. Much appreciated. I'm interested to start off with what is Imla and what's your role in it?
Well, first of all, thank you for having me, and it's great to be here in Skipton. So Imla's been going since 1988. And we're in our 36th year. Imla stands for the Intermediary Mortgage Lenders Association, and we work on behalf of mainstream and specialist lenders to foster greater understanding between lenders and brokers, to influence government, regulatory policy, share knowledge and expertise for the betterment of our industry.
Okay, so what about the membership at Imla? What do they get out? Because I obviously sit on Exco. I get to see you 4 times a year when we meet in London. What do the members of Imla get out of their membership?
So 2 bits for me, really. The first bit is that it doesn't matter who you are, as long as you lend mortgage money through intermediaries, you're welcome to join Imla. So that includes the big 6 banks and building societies. It includes specialist lenders. It includes small specialists, small building societies. Anyone's welcome to join. As I said, as long as they lend mortgages through intermediaries. I think it gives our membership the opportunity to get involved with organisations, with trade bodies, with government departments that otherwise they wouldn't be able to. Gives them a chance to get right to the forefront of any policy conversations on a regular basis. But the main bit for me, I think overall, I'd be interested in your view, is we're able to pool resource and capital to produce some amazing research material that for some of our members they wouldn't ordinarily be able to do. And they use that back at base for strategy or for setting targets. And it's also used by our intermediary partners as well. So I think that collaboration, all within the, let's be really clear though, all within the rules of competitive law, etc., it gives our members the opportunity to collaborate, to talk to discuss things with fellow mortgage lenders in the intermediary space, and hopefully, learn some stuff as they go. What do you get out of it?
So I think sitting around the table 4 times a year, and I know it's been virtual over the last couple of years a bit, but sitting around the table and debating topics and views and opinions with peers around the table, as you say, within the rules of competition. I find that kind of fascinating exercise, different views, different opinions from different sectors. So whether it's a specialist sector or the buy-to-let sector, everybody has a slightly different view or a different opinion on the same subject, but working together for the combined purpose of using the intermediary market and lending to the consumer. The other thing I think, and more recently, is the additional, resource at the expos that you've been organising. Just tell us a bit about what's the plan behind those.
So there's a couple of things we really want to achieve at Imla, and I'll come on to the expo secondly. The first one is the Working in Mortgages initiative, which is a careers and outreach website really for the industry. And it doesn't matter whether you're a senior professional, been doing it as long as you have, whether you're new to the industry or somewhere in between. The Working in Mortgage initiative gives something to everybody. Mm-hmm. And whether you're learning to land your first job or improve your workplace, find support, succeed at networking, or join the mentoring plan, the mentoring initiative. Working in mortgages is super important. It's a big focus for us in particular. And it's a collaboration between Amy and Imla. So it's there for both brokers and intermediaries. So focus number 1 is to continue to push that, to evolve it, to mature it.
And can you get my team, so my BDMs, my call takers, can they take part in that?
Absolutely. Yeah. And there's a huge part of it as well is diversity and inclusion. All they need to do is just go to the website, www.workinginmortgages.org.uk, and register. And whether you're a member of your team or whether you're a broker just setting out or an experienced broker, or whether you're in admin, there is something here for you. And the mentoring program is fantastic. So that's one of the first focuses. The second area you mentioned about expos. Imla wanted to give something back. And it was clear that whilst as a membership, there was a lot of value to us talking, as you said, and sharing ideas and working with the government departments, etc. What we wanted to do was give something back to our brokers. And so we decided 2 years ago to run a series of expos in which, and actually it's a really good example of collaboration between the 53 member firms, because actually if you think about it, the expertise that we have in-house between us is phenomenal. And so the expo was an opportunity. This year in particular we're doing two. The first one was at Ellen Road, and we had over 150 people split pretty much evenly between 75 lenders, 75 local brokers, all new to the industry. And we put a full day on for them of knowledge, of experience, of an opportunity really to get some really interesting topics. So we talked about the economy, we talked about how Bank of England decision relates to swap rates, how that affects pricing, how does that lead into mortgage production, what's the mortgage market look like, conveyancing, valuations, the green agenda, diversity, inclusion, a whole breadth, and the feedback has been fantastic. So the expos are really important to us. We're running a second one in November in Reading. And if there's anybody listening that wants to participate, it's free. It's a phenomenal day. As I said, the feedback's been unbelievable.
And presumably we'll promote those closer to
October.
the time. Yeah, October.
Absolutely.
Right, okay,
Yeah,
cool. I think what I got out of that more than anything else was the table conversations in the morning and the afternoon, and the energy and the passion and the knowledge of the delegates around the table was fantastic. Great to see. Which leads me in, segue, I think they say in the business, in terms of knowledge and experience, because I've worked out that between us, we have 65 years.
Wow.
Yeah, 65 years experience in the industry, which was,
Wow.
yeah, which I had to have another coffee when I worked that one out. But reflecting back just for a moment or two, what do you see as the kind of game-changing decisions or changes to the market over the last X number of years that you've been doing this?
What's worrying is, so the first thing that jumped out to me was regulation back in, it was October 2004. There'll be people listening to this that weren't even born. And you and I were right in the middle of it. So we are starting to get definitely too old. And in fairness, that regulation is what's created the DA and AR regime that we see today. And there's no doubt for me that the industry benefits from the oversight. And whilst many of the people listening to this will think that we've probably got too much oversight, I disagree. I think it's the best it's ever been. And when you compare our industry in terms of the quality advice that's given to the rest of the financial services, we stand head and shoulders above the majority of other areas within financial services. And I think that's down to the regulation that came in 20 odd years ago, but its evolution over the last kind of 10 years in particular has made a big difference. So that was a big change. Boring, I know, but it made a massive difference. For those who were around before that, it was a difficult period, and I don't think the quality of advice was anywhere near as good as it is today. So that's number one. And the second one is technology. And I'm not going to talk about, well, we might get on to talking about AI and the bits and pieces. What I'm talking about is when we first started, you and I, you could go into a broker's office and there would be paper everywhere. There'd be filing cabinets stacked everywhere. There'd be paper. You couldn't get a coffee cup on the desk for the amount of paper. And when I first started, I was at Platform Home Loans. It was called Money Store back then, but Platform Home Loans now. And we'd have to take a handwritten mortgage application through the post with supplementary application, supporting docs, etc., etc. The broker would be phoning every 10 minutes saying, "Have you got my app yet?" Get lost in the post. We'd be faxing backwards and forwards it would take weeks and weeks, and it was a real mess. You'd have people, and you'll remember the old AS400 systems, and we'd have manual people putting stuff on. When we moved into genuine platforms, IT-based platforms where brokers could upload and send an application electronically. I think it transformed.
And then get an offer back the same day, and
you know, you'll remember GMAC.
Yeah.
You know, they were
Yeah.
probably one of the first to really embrace this and produce offers within 24 hours. I mean, it would take 48 hours for an application just to get sent through. And you think back now that, you know, they think, I don't know what brokers think, but maybe they think that it's a bit admin heavy. But if you go back to those days before that, you know, when you had to send through a handwritten application, 3 months bank statements, 3 months pay slips, plus your ID, plus blah, 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 blah. It was phenomenal. So I think that was a massive game changer to get the platforms. Unfortunately, some lenders are still on those old AS400 systems, and those legacy systems maybe hold us back a little bit in terms of where technology is going to take us in the future.
But the majority of what we've seen, certainly in the last few years, has fundamentally changed the way in which we integrate, we integrate and we talk to and work with advice firms, with advisors, but also product design. The range of products available on the market nowadays it's not, there's no comparison with 15, 20, 30 years ago. But also the range of lenders and the solutions that are available for the customer. So going into the criticality or the symbiotic relationship between brokers and lenders, why do you think? How important do you think working ever closer together is between the lender and the advisor?
I don't think it's ever been more important. Interesting when you look at the stats going back in terms of the share of the overall mortgage market that's intermediated. Today it's about 88%. And that's improved from 50% in the financial crash all the way through. We envisage over the next 5 years that won't change at all.
So Imla's view is that continues to grow, or
it's probably around. It can't grow much further. You know, 88 to 90%.
But that's still massive.
Oh, huge, absolutely. And I don't see that definitely changing in the foreseeable future. When you think about the complexity now of, you know, you've come through the pandemic, you've got multiple employment sources, you've got deposit coming from elsewhere, you've got foreign nationals. It needs advice, and there is nobody better placed than a mortgage intermediary to give advice today, whether you're a first-time buyer, a home mover, or even going through your third remortgage. The complexity today has never been higher, and I think that relationship between lenders and brokers is so important.
And I wonder whether or not there's an opportunity for brokers to be, and I'm generalising, and I know that, but to be more proactive, particularly around first-time buyers. You know, my daughter's 29 this year. She will start to look to buy a house in the next few years, and she's going to pick up the phone to me. And no, she's not. She's going to text me because she won't talk to me on the phone. But she's going to get in touch with me and say, "Dad, what shall I do?" Now, whilst I'm in the industry and I can give a view and an opinion, I wonder why she wouldn't say for her first port of call, which firm shall I go and talk to? And how can we get firms to be much more proactive in particularly reaching out to the first-time buyer sector and say, it's so complicated, we are the best part of the industry to come and talk to first. Because deposit, we know the challenges around deposit, we know the challenges around affordability, but as you say, the way people are paid, the transient nature of roles, people don't work in jobs for life anymore. Who better to sit them down and say, these are the options available, going back to your point about the number of different lenders.
Yeah, and more than 88%, by the way, of first-time buyers come through intermediaries eventually.
Okay.
But it's how they get there in the first place. I mean, if you walk into an estate agent, then that's probably sewn up, in truth. And we've got lots of partners who have mortgage consultants who are sat in the estate agents. But actually, first-time buyers probably need advice before they get there. Because otherwise, how do they know what to be looking for when they're looking through? I can say through the paper, but clearly that doesn't happen. It's showing our age again. But when they jump onto Rightmove or wherever it is, or Zoopla or whatever it is, you're right. It is difficult because the mortgage market, when you look at it as a whole, it is 28,000 mortgage advisors, whatever the number is in the UK. And there aren't any ginormous. There's a few big companies in there, but people have tried mortgage advertising on the TV, and it's obviously not worked in terms of the return. So how do you get, it's a great question, how do you get first-time buyers? They get there eventually, but I wonder whether sometimes it's a little bit too late in the process.
They don't wake up in the morning, I guess, or any of us do, and go, great, I'm really looking forward to getting a mortgage today. So how do we make that a little bit more? It's really important. Plan for it earlier. The other thing, talking about lenders and broker relationship, and for me the need to educate particular first-time buyers is BDMs, telephone BDMs. Quite a lot's been talked about them, whether some firms reducing the size of them, some firms shifting their operating model. Value of BDMs, what's your view?
Oh, it's huge. And when you talk to the member firms within Imla, everybody in there has a number. You're right. It varies significantly in terms of how many, depends on the size of the organisation. But everybody invests in the BDMs, and they do that for a reason, because actually if you took them away, first of all, the ability for a broker to phone somebody with a new inquiry that needs that depth of knowledge and experience disappears overnight, as does problem solving when you go down the line. I think that BDMs are more important today than they ever have been, back to your point around the complexity of loans, but also for problem solving. A lot of lenders in particular have streamed back in terms of the back office because it's significantly more efficient. And a BDM therefore needs to get involved in two bits for me in particular, is new inquiries and problems. And if they're good at their job and they're able to place or not, but tell the broker really quickly, and secondly resolve problems, I think they're worth their weight in gold. And it doesn't matter whether it's a face-to-face BDM or a telephone BDM, I think both have got their value, especially given that, as you said, the way that the mortgage market has actually moved a little bit to working from home for a lot of brokers. It's a little bit more difficult to have face-to-face BDMs travelling around one company that's got 20 people working from home. It's perfect for telephone BDMs. And all of the Imla firms, Imla members, support, value, and are committed to BDMs moving forward, from what I can tell.
I'll drop this one on you, and I'll give you a bit of my view at the moment. But what makes a good BDM in your view? Because for me, it's somebody that really believes in their product and the proposition they're out there representing. They're absolutely able to answer all of the criteria and policy questions, and they don't act as a post box. So the email or the voicemail comes in and gets farmed off elsewhere. That's my view of some of the important bits. What about?
Yeah, you're absolutely right. But there has to be a return for helping to solve problems, to place cases and be really efficient and return phone calls. The other side of it is that they need to be able to sit in front or speak to on the phone advisors regularly, so that they can talk about their USPs, talk about where there are problems, be open and honest with them about what's good and what's bad, so that it helps the broker inform the decision as they go through. I think that there's a tendency to just use them, as you said, just for problems, but actually that's only half the role. The other half is actually to educate, and the knowledge now that the BDMs have got on the market in terms of pricing and product, as well as their own USPs, and as you said, that belief in your own system. I think they're the areas for me. So if there's any brokers listening, please invite your BDMs in, but only if they add value.
Okay. So talking about, finally, that's a people relationship bit. That's the bit that we say, you can't lose that. Let's go into technology, and in particular AI. And for somebody that thought AI for a long time was a road that joined Edinburgh and London, where does AI go in our industry?
So we're a little bit off. I mean, it's around the corner. It's in other industries in particular. But if you think today from a broker experience, I think they're in a super position. They've got great CRM systems as a rule. When you get a new case as a broker, you've got the ability, even on the same platforms, but if not by moving platforms, to look at affordability, to look at criteria, to source the product. And if it's a simple enough case, then a lot of the work can be done through, and there's more to come. And AI will help inform some of those decisions as well. And from a lending perspective, of course, you've got at the moment, all lenders are linked into the search companies and the and valuations that are coming back as whether it's an AVM or as a desktop, and then you've got links into potentially the inland revenue and to the tax off. All of these kind of things is all helping. And we're all getting better at that. So I think first of all, we'll continue to get better in those areas before AI is introduced. But for me, AI presents numerous opportunities to accelerate process in the mortgage industry in particular. I think it can automate some of the tasks, such as data collection in particular, but also some of that analysis. And I think it will significantly reduce turnaround time as we go on. And the bit for me is that, well, the two bits really. One is that it has the ability to improve the appraisal process. AI, especially self-generated learning AI, with market trends and knowledge, can certainly help us make better decisions as lenders, which would be great. Provide some of those insights that otherwise you might miss. But the bit for me is that's great for the simple stuff. But what it will do is it will free up the time for our SMEs, for our subject matter experts, our mandated underwriters, to spend the time that they need to on those complex cases. Because at the moment, we're having to spend too long on simple stuff and actually not enough time on some of that complex stuff. And it would just change for me how you interact with your broker. So you don't have to just wait. Maybe there's a little bit more you could do up front, because actually you've got the time now to make sure it's right when it lands. So I think AI will be, it will definitely improve, and there are opportunities.
We'll watch to see where that goes.
You and I will be well retired.
As to I think the current term is veterans. We'll see where that goes. Thank you for your time today, Richard. Thanks very much.
Thanks for inviting us in.
Thank you.
Thank you.